The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. And there's two markets that I really think we need to talk about today. Well, since this is my show, I guess that's what we'll talk about. The first one we're going to talk about is the interest rate, the T-bonds and T-notes. We're hearing about all-time record, lows being made in the Treasury bond yields. That's not true, folks. It was July of 2012 when those rates were lower. I'll post the weekly chart on the Treasury bonds to show you that's where we are. We're having a divergence now because the Treasury notes, which are the short-term rate, the shorter term, 5 and 10-year paper, that is running at a it's much smaller than the 30-year bond. That means the yield curve is flattening, and that's very bearish to stocks. That's one of the things that will make the stock market go down, supposedly. Who knows in these days and age. But we're going to cover these bonds and notes here. I posted on there the bonds over the past year, and you can see that we've come up and made a beautiful ABCD pattern here. One of the things that we really like to look at when we're watching for patterns to unfold, and this is certainly a nice one. Now, if we shift over to the long-term bonds, the weekly bonds, you'll notice that we have gone above the 786 retracement that we hit in October. We're now completing 3 drive to a bottom pattern, and you can see the yields are still lower than they were, back in July of 2012. So that's something that you really need to, look at. Someone's asked me for a 100-year chart on copper. I'm not quite that old. I started it when I was 3. No, I don't know. I don't really think it's relevant. Because that's just too far back. I mean, you stop and think what our industrial world has happened over those past 100 years. Frankly, for trading purposes, you really don't have to look more than, actually a year, a few months, or, 5 years at the most. But, copper is getting hit. It's been, why is the big surprise in copper, folks? It's been going down forever. We'll cover that tomorrow on tomorrow's show for the commodities, because that's one of the things I wanted to talk about. But the main thing here is to take a look at these interest rates, because it's telling a different story. They're telling you that things are really great. Now we realize Japan has negative note yields. We now have negative note yields in Germany also, and so that means if you buy the paper, you have to pay them for the honor of owning their debt. Now, that's not a very good deal, in my opinion, but, what do I know? Okay, the next one we're going to look at here is the Treasury notes. This is going back on a weekly basis, looking at the same type of thing we did with the bonds. And as you can see, even though the bonds are above the 786 level, the Treasury notes are still at the 61% retracement of the move from 2012 down to 2013. This is the flattening of the yield curve. So this is what it looks like, supposedly, but we'll see, how it turns out. If you'll notice this weekly butterfly pattern that we had back in 2012, that's what we have on the daily right now in the Treasury bonds. So this is a very interesting picture that we have, unfolding in that particular instruments. So, and these are big too. The notes are about 6 times bigger than the bonds, and the notes are huge. I mean, they're much larger than the stock market. Notes and bonds are much bigger as far as speculative interest than the stock market or stock indices by anyone's calculations. Okay, now the next group that I wanted to talk about is the infamous oil market, the market that will never stop going down. I mean, I have not seen this much press in the financial news in a very long time. I mean, just about every program is talking about it. Yesterday, I was taking a break and I was watching CNBC, and one of the analysts came on, a young lady from I don't know which company it was, XYZ, whatever it happened to be. I swear, I don't think she was 23 at the most. And she was saying that the reason why stocks were down is because the price of oil was down. Well, I mean, if you look at the price of oil, stocks should have been down since July, and that has not happened. So, you know, her comments were interesting, but they were just not truthful, or well, let's not say not truthful, because I'm sure she believed them, but it's not really representative of what's really happening in the market itself. Oh, I have one news announcement. Happily, I can say that the new book that Shane Smolian and myself have done is out now. They've delivered a few copies. It looks really good, and I'm going to have Shane on the radio show just as soon as he gets some time away to talk about some of the things that are in the book and some of the projects that he's working on, because he has some really good stuff to share with us, and he's a very bright young man and is quite sharing. Okay, we're going to move to the oil services index here, and I'm going to start it out with some work from my good friend and trading partner, Jim Bartolione. And what I'm going to do is to show you the way the market appears from a harmony aspect. This is the long-term crude oil market. It's a weekly going back, quite a few weeks. And so you can see that what we're showing here is that the AB leg and the CD leg are related by 61%. In other words, the CD leg is 0.61% of the AB leg. And that's what this chart is telling us. Well, it happens to be that low that we looked at, 44.22, was hit yesterday. Now, whether that's going to be the actual low or not, we'll have to let history tell us if that's going to happen. But right now, it looks pretty interesting. Now, Bart has showed us another chart that is really interesting, and I know you stock folks will like this one because it really gives you a good idea of the harmony that's in some of these markets, and we all know that we all like to see the harmony that's there. And this is the oil service index, and that's the SOX, I believe. No, the OSX, and it shows that over the period between 2011 and 2012, we had a really severe correction, and we're having this same type of correction now. And these triangles that you're looking at on this chart, are exactly equal. Now, I've asked Bart to just show a part of this because he had a very descriptive chart that showed all of the ratios and the harmony that was here. But just for simple purposes, I wanted to show that these things can really line up nicely. Now, I don't know if this is the bottom or not, folks. All I know is, if it looks like a duck and smells like a duck and walks like a duck, it's probably going to be a duck and not a raccoon. But we don't know. But all I know is when you hear this stuff on the news all the time, something's wrong. You can feed people carp all the time and tell them that it's sushi, but eventually they're going to realize that it's carp. And believe me, that is not something that you want to enjoy. My grandfather, he used to make an Italian dish with carp with olive oil and garlic, and he tried to bring it back on the plane from Italy to New York once, and they wouldn't let him on the plane, and he had to get rid of it. And he never forgot. He never forgot that. He didn't fly on planes much after that because they took his fish away from him. But anyway, getting back to the real market here. So I really think we're very, very close to a bottom in the oil market. Not just these things, but there's other things that I think that are important to look at. Now, I know this isn't the commodity show, but since I think we're so close here on this heating oil thing, or crude oil, I wanted to bring up the weekly chart of crude oil here, because here we've gone down and we stopped right at the exact 786 on the crude oil chart. Now, if we could do a longer term, which I do not have the data for it on this, but you could see that this chart has a trend line that goes all the way back to 1992. And so it's from a long-term perspective, of course it's in a long-term uptrend, but, recently you have to admit that it's probably been down. We did hit the exact level last night in the heating oil on the long-term 786 retracement. I'm a little leery because it didn't stop at the 61% retracement, but that didn't surprise me because crude oil was already busting through it. So we're getting very, very close in here. So I suggest some of you folks that are in the stocks, especially the oil stock sector, is to pull some of those stocks up and take a look at the patterns. I know Steve Rhodes does it. I know Basil does it. So keep an eye on those because they might offer some really good values here. And these stocks have been coming down in face of the market. So if the market goes down and oil starts to hold, these could be, you know, a good place to look for a stock play when the rest of the stocks are getting hit, because not all stocks go up and not all stocks go down. Remember, it's not a stock market. It's a market for stocks. You have to remember that. That was one of Bernard Baruch's famous lessons that he tried to tell people, that there are stocks that bucks the trend both up and down, and that's what you want to be looking at. We have a perfect example of that with Tesla. You know, Tesla topped back in July, and we had that big island reversal in Tesla, and it's been going down, you know, ever since, and it gapped down, you know, sharply today with the price of oil going lower. Well, the price of oil's been coming down since July, but, you know, Tesla sales were good. I don't think anybody that buys a $100,000 or $150,000 car is worrying whether gas is $2 a gallon or $3.48 a gallon. Well, when we left back in October, oil was $3.20 a gallon here in Tucson, and now we're paying $1.78. And I couldn't believe it when I filled the car up with gas because I was expecting the usual price, and then I realized that it was so cheap that I couldn't believe it. So anyway, that's been a nice for people that drive a lot. That has been a real godsend for them because the price of gas has come down, you know, so very, very much. So we want to be able to be thankful for the people in Saudi Arabia and all the other places in the world that have made our gas so very, very cheap, which makes it quite nice for us. Now, I don't think we're going to get free gasoline, as some people have decided that maybe we will get, but at least the gas prices are going to a level that are certainly affordable. They're 6-year lows, I believe, but we're getting ready for a bounce. Now, this won't be a new bull market, I don't believe. I just think we're going to get probably a trading range market, because no market goes up forever, and we certainly have seen or goes down forever. So we'll have to wait and see if this is going to be a bottom in crude. There are just too many people that, in fact, Goldman, the real key to it is the Goldman Sachs, because if you look at the history of oil recommendations with Goldman Sachs, in 2007, they had a special report on $200 a barrel crude oil when oil was trading at $135. So we got stocks under some pressure, and we got interest rates dropping, and we'll be back right after this break.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look here at the E-mini S&P. We had the low back on December the 15th, which was, of course, an important low because we went up and made new highs, much like we did on October of 2007. We also are looking at the lows we made on October 15th, where we had the major low that was very important. That were both of those dates, October the 15th and December 15th, were both spot on Bradley dates. What we have now is a market that has come down into early January and stopped at the perfect 786 retracement. That was when the S&P was trading at 1985. We hit that same low again today at 1985, but before we did that, the market rallied very strongly just a few days ago up to the 786 retracement. Then it came down, and then yesterday was very interesting because the market made a 786 retracement of that high we made 2 days ago. It surprised a lot of people on Wall Street, and because the market was up at 283 points early in the morning, in the first part of the morning, and then it began to roll over at around 10 o'clock, and started to go lower, and actually went far below the opening. It had a almost a 470 point swing in the Dow from high to low yesterday, and it continued lower today, so that's more than 500 points. Now, I've mentioned several times here on TFNN that the next time we get a big move, and usually the moves on the downside are bigger than the moves on the upside because fear is a greater emotion than greed. Well, we know that our biggest up move in stocks has been 440 points. And if we multiply that 440 times 1.618, we're going to come up with a number of around 700, I believe. So we'll just, let me get my old calculator out here. 440 times 1.618. 711. 711 to be a good crapshooters market that day. But that's what I think we'll do. We'll see a down move of 711 points. Now, that's not going to break a record. The record is held at in October of 2008 when Hank Paulson was scaring us to tell us that if we didn't pass this Too Big to Fail Act, TARP, that, you know, the end of the world was going to happen. And by golly, guess what? The end of the world was put off one more time. So that day we were down 777. So if you multiply that times 1.618, you're going to come with a move of better than 1,000 points. 1,200 points would be the down move. We will see, I think, during this move, we're going to, and if I'm correct, and this is a down move, because this has been a bull market that's been going on for 7 years. We started it in 6 years. We started it in March of 09. And here we are into almost to March of, well, another month or so, we'll be into March of 2015. So it's a 6-year bull run, and we should, we'll see one day probably 1,100 points. Now, on a percentage basis, it's not going to be as much as the 777, because when the 777 was down, you know, the Dow was trading at around the 9,000 level, or even 8,000 level, as I recall, because the low on the Dow in the March bottom was around 6,400, 6,500 in the Dow. So we almost tripled in price. In fact, we pretty much did during that time. So that's pretty much what we'll look at. So we'll see if this is going to happen. But it looks like we are heading down to the 1924 level in the S&P. That should happen if this pattern is correct, and it certainly has all the earmarks that it is correct, that we will be looking at something probably early next week would be the time frame to look at. We don't have a Bradley date due until nearly the end of January, so we have to wait for a Bradley date at that time. We don't have a new moon until that'll be another week on that. So we still got a chance here for this market to complete this pattern down here at this level. Now, this has certainly been following the short-term trend because we've had lower highs, you know, through this level. I've noticed now that there's been several people have been posting this divergence that we've been talking about here at TFNN ever since July, and that is when we've had these lower tops with the New York Stock Exchange. We're going to take a little break here. We get back, we'll cover that, and we want to get to the gold market.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've had a request to talk about Tesla Motors. It's been under a little pressure recently because of the fact that we've had lower oil prices. So it's very interesting where we are right now because we've had some, we had a beautiful, let me do this, put this into Tiger TV so we can see it. This is not what I wanted. Give me 1 second here. And then we'll see if we can do it here. Hold on. There we go. Now we can see Tesla. We had a big three drive to a top pattern happen in August. We also left an island reversal that took 10 days to form. The market gapped down. Then we had the Gartley pattern that rallied up to the 61% retracement. And now we're really interesting now, folks, is because we're almost at the 61% retracement of the move from November of 2013 to where we are now. Comes in at 182 a share, and the low today in Tesla was 185 and change. So we're very, very close to a 61% retracement. Now, whether that'll hold it or not, you know, we don't know for sure. but the pattern is certainly there. The thing that's important here is that if you look at this Tesla pattern, this is exactly like the bond pattern that we're looking at when we first started the show today. Those patterns are very, very similar. They're just patterns. I don't know the ramification of the fundamentals of these, but frankly, I don't think not too many people do either, but we'll need to be able to look at. Now, the next one we're going to take a look at is the Dow Jones Utility Index, because it has been the leader of this market. But on this last run yesterday, we made a perfect Gartley sell signal up at the 830 area, and that tells us that the target could be down as low as 600. That would be another 5% down in the utility index. So that's one of the things that we're focusing on at that time, to keep an eye on where we really are. So give me 1 second, and I had my transportation chart up, and then I lost it. Let's get it back up here, and we'll take a look at it the same way we did the others, because the transportation is already weaker. It has already taken out the lows of yesterday by quite a bit. And it looks like it's the same pattern that we have in the E-mini S&P. All of these are showing a big ABCD pattern, coming down. And if you do just a simple time count, which the ones that Basil does is far from simple, but it certainly is an interesting time count, and that would be out about 2 weeks. So around, you'd be looking for a low to form in the transportations right around the fourth week of January. We got a caller today from, boy, my eyes are getting so bad I can't. Brent, are you there?
I am, Larry. How are you today?
How are you, my friend? my monitors are so far away from, I have 42-inch monitors, and when I saw that there was a caller coming in, it was so far away that I couldn't see it, so I had to move over to see where we are. What can I do for you, my friend?
Oh, I was calling about natural gas, and my specific question would be about that 135 pattern that you discussed a little while ago.
Yes, it broke that as I believe, but I've been traveling, so I don't know. Go ahead, my friend. Say what you.
That was my question. I was wondering if that was negated by that lower bar that was put in, kind of got below that. It had the rising pattern, but then it dropped below that, so I assume that kind of negated that pattern.
It certainly did. Now, that was on a weekly, wasn't it?
I think it was more on a daily, but I mean, it could be on both.
Yes, it did break it. It did break it on the. It broke it on the daily, but if you take a look at the long-term weekly here, we've had a really big reversal here today in natural gas. We went down to that 270 and change, and now we're up at almost 320. That's a very large move. We've had a double outside day. In other words, we took out the lows of yesterday and the highs of yesterday, so that's usually a very positive sign, and it was coming in right at that 786 level. So that's what it looks like to me.
Certainly having a good day today.
Yes, it is. So if you're in that, I would stick with it, because it's got a chance of going a lot higher. How was that stock you had that started off like gangbusters? Did that hold up?
Oh, CLR?
Yeah, CLR.
Yeah, it's still hanging in there. It's around 35.
Well, that's good. That's very good.
Yeah, we'll see what happens with oil. That's kind of what I.
Well, the oil services sector is got some really good harmony, as I talked about earlier on the show, that my good friend Jimmy B picked up on, and it looks very interesting. And the other thing is, you've got so many people that are negative oil now. It's one of the things I was talking about before the break was, back when oil was 140, I believe, Goldman Sachs came out with a special report that it was going to go to 200, and later we found out that they were heavily short. So you've got to be really careful when they bring out a report saying that they're looking for under $40 a barrel in oil. They might have a little more of a suspicious nature of what they're really trying to do. So just follow the charts is my rule of thumb.
I was going to ask you about the Japanese yen, if you have a second.
Sure, please do.
I was looking at the daily chart, and I guess my the observation that I wanted to ask you about was, as we came off that 121 level, the first time off of that top, it came down pretty severe, and then it had a nice kind of V-shaped bottom, and now we're having lower highs and lower lows. But my question was, on the second top that we had, it seems to be, it's just a different pattern. It's more rolling over, and it's lower highs and lower lows. But I just wondered if that, what your experience has been with the two different patterns, just what your expectations are.
Well, I try to put them together, but if there's a question about either one of them, what I do is I go to the shorter term pattern, because then I can quantify my risk better. Whereas a longer term pattern, like we're having in bonds right now, it's harder to quantify your risk. So I just go to the shorter time frame pattern and try to find that one.
Okay. I was wanted to let you know I had a little bit of a rough start to the new year. Leon's grandfather passed away on New Year's Day.
Oh, yeah.
But he had a great life. He was born in 1918.
Wow.
And yeah, it was made it to 96. So that's
my dad was born in 1918, but he died 40 years ago. So I remember the year quite well. But I wasn't born then, thank God.
Yeah,
I don't know.
Go ahead.
Oh, I was just going to say, the times now, with all the communication that we have, I mean, they really scare the heck out of you when you watch the news. I mean, I can understand why people don't like to watch the news, because it's just flat out scary, you know.
I was just trying to relate to one of my sons, Shane, the older one, that how fortunate they were to have had a great-grandfather for over 20 years. That's pretty unique. I mean, to even have a grandparent, but to have a great-grandfather for that length of time, they're fortunate.
I had two great-grandparents at that time. One lived to be 103, the other lived to be 98, and they have a picture of me with my great-great-grandparents when I was a 2-year-old. So that was really, we have a lot of longevity, you know, in the family, so that's good. Hey, listen, I want to thank you for calling in. I want to wish you a Happy New Year, and let's have a good start to it, okay?
Absolutely. Same to you, Larry. You take care, and all the best to you and your family.
You bet, Brent. Thank you. Okay, we got another caller from Massachusetts. Manny, are you there?
Marty.
Marty. Well, the guy at TFNN can't spell very well. Let's try it another way. Larry can't see it very well. Sorry, Marty.
Well, that's okay. No problem.
I'll call you anything but late for dinner.
That works.
Okay. What can I help you with?
Well, what I did, I heard you saying on your opening that it's a market of stocks, of course, and that some things are not going down. And I think I just, luckily, just out of dumb luck, latched on a couple of them that I'm in. And I think the reason they're not, fundamental reason they're not going down is because they're favored by the low interest rates. And what they are, one is a hospital REIT, MPW, and the other one is a senior housing REIT, SNH. And they've both been holding steady and creeping up through this whole downturn.
Well, let's take a quick look at it. They must not be carrying a lot of debt if they're doing that, would be my guess. Hold on one second, and we will...
In fact, one of them, MPW, just gave a 30 million share dilution, you know, to pay for some hospitals they bought in Germany, and instead of going down, it went up. Their 30 million share on offer was at a higher price than the market price, and they sold out in 3 days.
Marty?
Yeah.
Don't ever shoot the messenger, okay?
Okay.
But you got to be really careful here, pal, because we are looking at a beautiful butterfly pattern forming up here at around $15 a share in this. So
Which one?
This was the MPW. At $15. The high has been $14.99 or something. What I would do is I would put my stop under the low of last week at around $14.50.
Thank you.
Because
Yeah.
that's a perfect ABCD pattern. If you go into Tiger TV and take a look at it into the Tiger, into the den, you'll see that it is it's just absolutely a perfect one. And that goes back all the way to September. And, you know, this stock has been it's been a much weaker than market stock because, you know, we're just basically at this level right here. We're at a 50% retracement of the high we made back in 2013. In fact, it's just a little above that level. It's almost at the 61%. But just be really careful here, because it's going to have a lot of resistance at $15. And if you go below last week's low, to me that would be a sign that's saying, yeah, that maybe you ought to revisit it later.
So raise my stop on that one.
Yeah, I would certainly do that. That's what it looks like to me. And the second one that you were looking at was
SNH.
SNH. That is a healthcare.
Well, it's senior housing mostly, and some medical buildings.
Don't talk to me about senior stuff, okay? Let's talk about
join me in.
SNH.
Yeah.
Okay, just a second. We'll pull this up. Okay, give me 1 second here. These are stocks that I don't look at, so I've got to get the data refreshed. This one is actually even weaker than, it's stronger than the rest of the market, but it's at a level that's also, be real careful here. Here again, I would do the same thing. Oh, this is really interesting here. In the last 6 weeks, it hit the 61% retracement of last year's high 1, 2, 3, 4, 5 times. So this is real easy decision to make here. If you don't get above 23 really quickly, do the same thing. Put your stop under last week's low, which would be down about 80 cents from where it is right now, is what I would do, because you stopped at the perfect 61% retracement of the high from last June. So, and this is a weaker than market stock, because, the market went up and made substantially higher highs than the rest of the market.
Right.
So
okay.
I would tighten your stop up on that one also.
Well, I'm glad I called.
Well, like I say, it's you get what you pay for, my friend, but this is my opinion, and sometimes I'm wrong, sometimes I'm right. But don't kill the messenger.
Okay. Thank you, sir.
Happy New Year to you, my friend.
You too.
You bet. Bye-bye. Okay, now we have a question about Tesla Motors, which we've already answered. And the next thing, someone asked a question about the Bradley model, and I'm not going to do anything about the Bradley model yet, because I'm going to have Shane Smolian on very soon, and he can go over some of the things that he worked on with our book, and we'll be able to pretty good idea of what we're looking at. We've got another caller from Thailand. Hey, Saiwadi.
Hey, Larry, how you doing?
Mikey, how are you, my friend?
Okay, how about you?
Above ground, and I stay away from open graves.
All right, well, that's about all we can do, That's I'm at a point in my life where I'm making these discoveries. I just got off the phone with my dad, and anyway, he told me, the guy down, one neighbor and so, this is down in southern Florida. My parents go down to southern Florida for the winter, and they, we just retired, and anyway, so now he said, well, he was, and I was like, well, get to the point here, and I knew.
Hey, Mike, we got to take a break. Stay with us, okay?
All right, you got it.
Yeah, stay with us, please.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Darrell Martin here on TFNN.
Okay, we're back with our friend Mike from Thailand. Mike, what can I do for you today, my friend?
Hey, Larry. First of all, I want to say thanks for all the information you passed by my way last week, because I've made some really handsome profits on your advice there. So I just want to say thanks for that. I really bailed myself out of a little ditch I dug myself into, you know.
Well, put it on the chalkboard for when I'm wrong.
You know, I was just telling my brother about you. You know how you're pretty humbling. I said, you got to listen to this guy. You got to listen to this guy. You know, whenever you give him a compliment, he kind of takes it in stride. He doesn't let it go to his head and that kind of thing. I've been trying to get him to listen to it. He's a weatherman, and he thinks everything is unpredictable, you know, not to mention the weather, although the weather, he admits, is becoming more predictable. But he's one of those guys who thinks that, you know, you can't predict movements in the markets. And you know, I proved to him over the many years about, you know, myself and as an example how I've survived off of these markets. You follow what I'm saying?
Sure, absolutely.
Although I've never been an in and out trader like I'm just doing now. I did it 1 year. I did it a couple of years, you know, years ago. And 1 year I had a dynamite year, but this is the first time, you know, I'm going hog wild on options and stuff like that, and I'm doing okay. You know what I mean?
Yeah. Well, just remember, hog wild turns into pork sandwiches, so be careful.
That you're totally right, and that's you took the words out of my mouth, because that's what I was going to tell you. Anyway. I wanted to mention something about the New York Stock Exchange Index, and I know that's your favorite index, and it's become mine ever since. Over the years, you've explained why. It's the most comprehensive index, and you know, it's a good gauge of things. And that being said, I know you've talked a lot about the syzygy of planets. Are you with me so far?
Yes, absolutely.
Okay, well, I've done over the years, I've done more and more thinking and pondering and super contemplating about Fibonacci patterns, how I see them in nature and everything like that, but how they really don't work out in the stock market. But now, over the months, I've changed my my mind on this. They are in the stock market. You know what I mean? They are in these price movements. But the question is, you got to get enough collective data. You know, you can't just look at one index or one stock. You got to gather as much data as possible to come to these Fibonacci conclusions. Okay?
Yes, I agree with that.
Now, off of the back of that, I've done these are just some back-of-the-envelope calculations I thought you might be interested in knowing.
Sure.
I think we're in a massive consolidation right now with the NYS. I'm picking the NYSE right now. I know that's your favorite stock exchange index, and I know we're running out of time here.
Yeah, we are. Hey, Mike, why don't you give us a call tomorrow during the commodity hour?
My God, I don't know if I can wait.
Okay, well, listen, thanks for listening anyway, folks, and we'll get back with you tomorrow on the commodity hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.